Good afternoon, everyone, and welcome to my Precious Metals Update. My name is JR. Today's Tuesday, October the 6th, 2015. A lot of action here. Last week, we decided not to raise interest rates. So we actually saw a lot of momentum here on the precious metals sector. As expected, obviously, not raising rates is going to support the precious metals, also supporting the market as a whole. Let's get to the analysis. Today I'm going to do the monthly, weekly, and daily for both gold, silver, Dow Jones, US oil, and I'm going to do some ratios also between gold and silver and Dow Jones and gold. Okay, so I'm going to try to keep this under 10 to 15 minutes. Let's see how fast I can do this. So as expected, we remember on the last video I pointed out this piercing candle here that was going to be bullish. And we also mentioned that anytime you can get in here at this area here, we were hoping we were going to do good. Obviously, the market is moving up very, very nicely. So all these positions are doing very nice. Okay, so that's your monthly chart. Gold managed to find some support here at this long-term trend line. And as of now, it looks like the move below this wedge, brief attempt to go below it. And then you had to move to the upside. Again, remember, any moves that are false usually lead to big moves, fast moves in the opposite direction. So based on this monthly chart, I am expecting gold to surpass 1200 and possibly test the 12.25 area. Okay, that's on your monthly chart. Okay, but it's very critical that this level here between 1155 all the way up to 1170, it does not hold as resistance. We do need to break through that level in order to go higher. Until we surpass that level, we cannot at all assume that we're going to go any higher than this level here. And until we go below the 1190 all the way down to 1170 area, once we fall below 1170, that's when you can predict that whether this market is going to continue to go down or whatever. But as of now, there's no indication that this market is going to do anything else but either go sideways. It does look like it's attempting to go up, but again, we have to surpass 1170 before we can open the doors to 12.25. That's your monthly chart. Let's go to the weekly chart. Weekly chart found resistance here at this trend line, this short-term trend line. So the weekly chart is still kind of looking neutral, right? We're still bouncing off between 1150 all the way to 1188. So again, on the weekly chart, very clear that right now the market is just really looking for a direction in between this area here, right? So we're just consolidating as of now, at least from what it looks like on this weekly chart, right? On the daily chart looks like it's going to find some resistance here. Let's delete some of these lines so you can paint a better picture. So really on this daily chart, this is the level to watch out for, right? These are the levels to watch out for. As of now, this market could continue to go sideways. But again, if we do want to make an attempt to go to 12.25, we do need to go above this high here, right? Because this is your high, lower high, and this is your most recent high. This one doesn't necessarily count all that much, but as of now, we have broken through this trend line here, but you can see here that we broke through this trend line there and then we came back down. Did not create another low, right? The low was higher here, so you have a low, higher low, higher low. Now we have a high, lower high, lower high, lower high, and we really do need to surpass this level here. But I'm not going to call this I'm not looking to start another uptrend until we surpass this level here. This is the most recent high. This would be the most important high for us to take out. We take out this highs, and now we should be clear to test this level here, roughly around this level, so we can see something like this and possibly continue to go higher. And hopefully this market can turn around and finally start an uptrend. If we do want to find an uptrend, we do need to go back to the longer time frames. Okay, and we need to see a move above this area here, because these are your highs. Now, one of the good things about this chart is that you guys always hear me talking about zones and levels, and this is a selling level, this is a selling level, this is a selling level, and this is a selling level. Now, as you can see, these are all levels on top of levels. I've said this before. Normally, when you have levels on top of levels, they usually don't hold as good. Can they hold? Absolutely. But what you're looking for is you're looking for levels like this, another level like this. This is a level on top of a level, right? So this is not a good solid level. Here's a clean level. This is another clean level. So this is how you want to see these levels, right? So you can see here that this level here held perfectly for quite some time until it broke down. Now we're testing this level. These levels here, level on top of level, do not work as well, okay? That's your, so let's go back to the daily chart. So again, on this daily chart, what we're looking for is a move above this level here. Once we can pass this 1170 area, then we should be clear to test the 1225, 1230 area. But ultimately, in order for this to turn bullish, we do have to take out this high. I think once we take out this high here on 1230, that'll be a phenomenal indicator, but that should also suggest that we're going to have some sideways trading. But really, the move for a bull market would have to be this level here. Because once we take out two major levels of resistance, so this would be one major level of resistance right here, 1230, then you take out another one, which is 1308. Now you've developed two solid, you've broken two solid levels of resistance. Now we can call that a bull market. But as of now, really what we are having is a disruption in this bear trend. And as of now, you just want to continue to use caution. But ultimately, the market is looking very, very poised to continue to go higher. Let's look at silver. Silver finding some resistance here at this longer term trend line here. I expect silver to come back down here to at least the 1480 area, possibly to retest these lows again. As of now, given the state of the economy and the heightened tensions around the world, I don't see why silver will continue to create lower lows. But as of now, we've broken through two solid levels of resistance. Now what I'm expecting to do is I'm expecting a move down here, test this trend line here, and continue to retest this until we can hopefully break out. Obviously, a move below this area here would probably send us to test the lows, which is roughly at around 1397. A move below 1397, obviously, we will see a bigger pullback, right? So we will see a deeper move to the downside, right? That was your daily. I should have started with the monthly, but at any rate. So here's your monthly chart, right? So tested this long-term trend line. This is a really solid long-term trend line. I really don't expect for us to see any moves to the downside. This is a monthly chart. You have a very nice engulfing candle here, okay? This is a very nice engulfing candle. Now, what do we need to do? This is the month of October. So October still has roughly, 20 days for this market to come back down and this not turn out to be a bullish engulfing candle. If we can finish off October around this area here at around the high 15s, possibly even the 16 area, then you have a bullish engulfing candle. This candle has engulfed all the previous candles before, at least the last 2 or 3. That should be very bullish. And again, just like we did on gold, you want to buy in the middle or at the bottom of this candle if the opportunity presents itself to continue to go higher. If silver surpasses 1850, I'm going to call this a neutral market. And we're going to see some sideways consolidation. But as I said before, you want to see two levels of solid resistance in order for us to call this a bull market. So if we take this level out here roughly around 18 and a half, 1830, that should be very good, at least to end the bear market. At that point, we might have some sideways consolidation before taking off. And again, once we break this level here between 21 and 22, then I'll call this a bull market. But again, market looking very positive, especially testing this trend line and especially having this giant engulfing candle. It is very early in the month for us to say that this bear candle is going to stick, though. I mean, that this bullish candle is going to stick. Let's look at the weekly, right? Weekly chart again. Let's clean this up a bit. All right. So let's take a look at this here, right? right? So silver looks like it's trying to challenge this area here, but again, this is really the long-term trend that you want to keep in mind, right? So right now we are running into some resistance. Depending on how you draw the lines, you can draw it off this. You can draw it like this from here to there, or you can draw it like this from here to there. But I like this one better, so I won't even draw the other one. Okay. So right now running into some resistance. You have this used to be support, right? Support. Now is turned resistance. So again, we do expect this to hold at least for a bit longer, maybe go up over here to the 1680 range, test this level here, and then come back down. But again, as of now, I'm not expecting a big move on the precious metals, but I am expecting some more volatility, up, down, up, down. But as of now, I do not expect any new lows. Okay. That's your weekly, and your daily again looks very positive. Big up moves, very nice solid candles. Again, testing this level here, so I would use caution, right? So this is how this silver trade played out. I know I called this a few weeks back, or about 2 weeks back, and I said that this zone is the red zone. Now keep in mind again that once you set this trade up, there's no changing it. No one can change it. This is a new software that I told you guys about. And once I set up the trade, there's nothing that can change it. So it's not like I can go in and edit this and make it look like it was profitable or non-profitable. So this is a silver, touches this red area here, and look what happens. So it's a really solid move. It's time to start taking profits on these short-term positions, okay? Here's another one that I did on copper, right? This is the red zone here on copper. When we saw this red zone, you automatically buy. This is a phenomenal buying opportunity. And so you have a big move to the upside. So again, the trades are working out. The short-term trades are working out really nice. And at this point, it's just a matter of time before this thing turns around. There's a lot of political tensions around the globe. So I can't imagine that this market is not going to take off here pretty soon, especially with all the economic fundamentals. Job reports last week were ridiculously bad. I mean, usually we have a miss or a gain of about 10,000 or 5,000, 10,000, 15,000 jobs. But we had a miss of over 60,000 jobs. So when you had that big miss, that's when you saw the big move to the upside, right? So let's go to the Dow Jones. So the Dow Jones right now, looking to find some resistance around this area. I'm not playing the Dow Jones right now. I have some orders up here. If it sells me, great. If it doesn't, I don't really care. But I don't think this market has enough legs to continue to go up higher unless they announce that they're not going to raise interest rates this year. But of course, they're never going to come out and just flatly say they're just going to wait till every meeting and surprise everyone with the no interest rate hikes. Okay. So that's your Dow. I'd be very careful with this market here. But again, I found some support all the way down here at around 15.3. The low was actually 15.1. And now we're at 16.7. As of now, if I were going to trade this, I would probably trade it against this high here because this trend line should help support it. But again, I'm not trading this trade. Not at all. Okay. Let's go to oil. Oil broke out here. You had a bullish flag. This is a nice bullish flag. If you take this trade here, I think right here is the perfect time to get out, right? Roughly around right here between, I would say between 48 and 50, all right? And the reason why is because you have this long-term trend line coming down from all the way from 2014, right? You also have what seems to be a head and shoulders formation. So I wouldn't be surprised if I see oil go from its current prices all the way back down here to complete this formation. Do I think it's going to go lower than this? No, because I see a pinch here, and usually these wedges, you guys already know that wedges are usually my favorite ones to play. I'll probably find some support around here, around the 35 range, before taking off hardcore, and probably within the next year or two, we'll see this thing trading back in the 60s and 70s. Okay. So oil looking really nice. So let's look at the gold and silver ratios. Okay, gold and silver ratios. Let's look at the monthly chart. So the monthly chart, looking very bearish on these ratios. Also remember that bearish ratios are usually bullish for gold and silver. So as of now, it looks like we are looking to target this area. So I wouldn't doubt, I wouldn't be surprised if we see a move. I wouldn't be surprised if we see a move below, a move back down to the bottom here on the precious metals, simply because from the looks of this chart here, and again, the ratios, as the ratios go up, silver and gold usually go down, and vice versa, right? So I would expect this to find some support here and then make an effort to go up here to the 83, 84, $85 range, 85 ratio range, for completely breaking down and just seeing a new low. Again, this is a broadening formation. You guys have heard me mention this before. These formations are very bearish, but again, we are looking to test this top of this level here on 86, 87. But ultimately, this is the time to sell some gold and buy some silver, because these ratios are suggesting that silver is going to move up much, much faster than gold is. Right now, 1 ounce of gold will buy you 70 ounces of silver. Once this thing hits in the 80s, again, you can see here that once it does, you usually see a big move to the downside. So again, anytime you see this thing come up to this red zone between 79 all the way up to 87, to me, that's buying silver. You should buy silver, no doubt in my mind here. Okay, that's your gold and silver, and your your Dow versus gold chart. So this chart didn't really go back before 1976. So what I took was, I took this chart here and I basically just drew in what I saw here. I know it looks a little bad, but don't judge me. Okay. So we can see here that back between 1920, that's when the Federal Reserve was created. The Federal Reserve was created. We had an era, a gold standard area back in the 1800s. We had a really nice and stable monetary system, and immediately after they took over, you see the big booms and busts, and that's really what I've highlighted here. So what we have is, back in the early 1900s, you had a move up here. That was the Great Depression. As the Dow Jones and gold go up in ratios, the metals go down and the stock market is going up. As they're going down, then you would have gold outperform the stock market, right? So you had a big move in the 20s during the Great Depression. After the Great Depression, that's when the precious metals began to take off. Then you had another big move by the year 1968, 1969. You saw a peak where the Dow Jones was buying you 28 ounces of gold. And by the 1980, it was only buying you 2 ounces, a little bit less than 2. So the lows are getting lower, and we expect this low to get lower. I know I've said this before. I know it sounds kind of silly, but again, charts don't lie because they can't talk. So you have a low, you have a lower low. I expect another low. And another thing that you also want to highlight is this move here. You see this move where it goes from 4 all the way up to 10. This is the move that some people are comparing this. So you see this right here. It looks like this is what we saw here. So again, we would expect to find some resistance here. I don't expect to create new highs when it comes to these ratios, the gold and Dow Jones ratio. And I do expect from here on out gold to outperform the Dow Jones. Okay, and these ratios to come back to 2 or 3 or even 1. As crazy as that may seem, the charts, that's what the charts are signaling. And you know, when you put together, when you put in all you have a bearish engulfing candle here, and when you also add up all the political tensions and all the economic fiat systems around the world, there's no reason why this can't happen again. Okay. So we have tensions in Syria, Libya. I mean, every country that you can possibly think of right now is going through a lot of turmoil. So I don't see why we wouldn't be able to see the Dow Jones at a 1-to-1 ratio again with gold, probably within the next year or 2, or maybe even 3 or 4 or 5. Who knows? But again, the charts are suggesting that we are going to see lower. Now, is gold going to go up to 10,000 and the Dow Jones going to go to 10,000 before we see a 1-to-1? Or is the Dow Jones going to 5,000 and gold going to 5,000? I don't know. Or is gold going to 20,000 and meet the Dow Jones at 20,000? I don't know. But the whole point is that this chart does suggest that the Dow Jones will be at 1-to-1. Currently, we're at 15. We saw a high of 17. And if this is the same move that we saw back here before a continuation down, then again, this is the time to buy gold and to start selling your equities. Okay. And the last thing I want to go over is, actually, that's about it. All right. I hope you guys enjoyed the video. I was not able to keep it under 15 minutes, but I hope you enjoyed it anyway. And see you next time. Bye-bye.